Welcome back, future homeowners. If you joined us for the first video, and if you didn't, go hit play right after this. You've already dipped your toes into the big, exciting pool of homeownership. We talked about why buying a home is such a powerful move and what it means for your lifestyle and future. Now that we've planted the seed of possibility, it's time to water it with knowledge. In this next part of your journey, we're going to dig into what home ownership really means in Alberta. Spoiler alert, it's not just picking out countertops or choosing between carpet and hardwood. There are actually different types of home ownership, and understanding them can save you a lot of time, money, and wait, I own what now? Moments down the line. And because real estate loves its jargon, we'll also cover some key terms you'll hear on this journey. Don't worry, we've got your back with clear, simple explanations. By the end of this video, you'll be throwing around words like amortization and pre-approval like a seasoned pro. So let's start with understanding the different types of home ownership available here in Alberta. Yes, it's more than just picking a house you like. You need to choose the type of ownership that aligns with your lifestyle and goals. Freehold ownership, this is the classic, tried and true option. With freehold ownership, you own everything, the land and the buildings sitting on it. No strings attached. You're the boss here. Want to build a deck? Go for it. Thinking about painting the door neon green? No one's stopping you. Well, maybe your neighbours, but not legally. Freehold gives you maximum control and full independence. With a freehold property, ownership is permanent unless you decide to sell, and if you do decide to sell, it's worth noting that these properties tend to offer stronger long-term financial value compared to other ownership types. You also get some serious flexibility for future use. Want to add a rental suite? Thinking of subdividing? Maybe down the road you're considering redevelopment. As long as you follow local zoning bylaws, you've got room to make big moves that could benefit you long term. Of course, this freedom comes with responsibility. There are no shared maintenance fees, which means you're on the hook for all upkeep, taxes and repairs. But the trade-off, total privacy, solid equity growth, and the ability to truly make the home and the land it's on your own. Freehold is ideal for those looking to plant deep roots and create a space that grows with them. This one's a bit of a curveball. With leasehold, you own the building, but not the land it's sitting on. That's right, the land is leased, usually from the government, a developer, or in some cases an indigenous community, for a specific period, typically up to 99 years. It's most common in urban developments or on indigenous lands, and while it may feel similar to full ownership, there are some key differences. Once that lease term is up, the land, and potentially the home on it, can revert back to the landowner unless the lease is renewed. The upside? Leasehold homes can be more affordable up front, making them appealing for some buyers. But, and it's a big but, lease terms can affect everything from resale value to mortgage approval, and not all lenders are comfortable financing leasehold properties, especially if the lease is nearing expiry. It's a unique option that works for some lifestyles and budgets, but one where you'll want to read the fine print and maybe call your lawyer for a friendly chat. Whether your home is freehold or leasehold, there's one more piece to the puzzle: how you share or hold that ownership. It's not just about what you own, but who you own it with and how it's set up. These are just different ways of dividing or managing ownership within the bigger freehold or leasehold categories. Let's break them down and see which one might work best for you. There's condominium ownership. Now, don't just picture a high-rise tower in downtown Calgary. In other areas like Monteith in High River, you can own a standalone home that's still considered a condo. Jenga Homes' latest development at the Murals of Monteith is a great example of this. In this case, you own your individual home, but you also share ownership of common areas like private roads, green spaces, or shared landscaping. You'll pay condo fees to cover the maintenance of those shared elements. The upside? Someone else handles the lawn care and shoveling snow. It's a great blend of independence and convenience. Moving on to cooperative, co-op ownership. This one's a bit different. It's like joining a club where instead of owning your specific unit, you buy shares in a corporation that owns the entire property. You get the right to live in a unit, but decisions are made collectively with fellow co-op members. It's community living with a twist. Perfect if you love the idea of shared responsibility and voting on hallway paint colours. And finally, there are joint tenancy and tenancy in common. Joint tenancy is perfect for married couples or close relatives, where two or more people own the property equally, and if one owner passes away, their share goes to the surviving owner. On the flip side is a tenancy in common, which is a bit more flexible. Here, two or more people can own a property together, but with specific shares that don't have to be equal. Great for friends or business partners buying together. Each person can sell or will their portion independently, which makes it a good option for co-investing. So there you have it. A whirlwind tour of the different types of home ownerships in Alberta. Each option comes with its own level of control, responsibility, and financial commitment. But don't worry, we're just getting started. By the end of this tutorial, you'll know exactly which type of ownership fits your lifestyle and needs best. Let's pause here for a moment. If you are finding this information valuable, don't forget to subscribe and share it with your friends and family.
Let's now dive into why owning a home isn't just about having your name on the deed. It's about unlocking a world of benefits that go beyond the front door. From building your financial future to enjoying the freedom of finally making your own house rules, home ownership opens the door to a life that's truly yours. Building equity and wealth. Imagine turning your monthly payments into an investment rather than just paying rent. That's right. When you own a home, every mortgage payment helps you build equity, which is like your personal savings account, but much bigger. Over time, as property values rise and you pay down your mortgage, you're not just paying for a roof over your head, you're building wealth. Long-term stability. Ever felt that anxiety when your rent goes up unexpectedly? With home ownership, you get to kiss those worries goodbye. Most mortgages have fixed payments, so you'll enjoy stable housing costs. This stability gives you the freedom to plan for the future with confidence, whether you're saving for that dream vacation or planning for your kids' education. Personal freedom and control. Here's the best part. When you own your home, you're in charge. Want to knock down a wall to create an open-plan living area? Go ahead. Fancy planting a garden to grow your own veggies? The backyard is all yours. Home ownership means you can personalize your space to reflect your style without needing permission from a landlord. Community and roots. Owning a home often means planting deeper roots in your community. You'll find yourself more involved in local events, school functions, and neighborhood activities. It's a great way to build connections and create a strong sense of belonging. Tax benefits. Let's talk taxes. Yes, they're not the most exciting topic, but there's a silver lining. Homeowners can sometimes enjoy tax deductions on mortgage interest and property taxes. While specifics can vary, these potential savings can add up and give your budget a boost.
Now, before we all get too swept away dreaming about backyard barbecues and custom kitchen islands, let's talk about the flip side. Yep, owning a home comes with its share of responsibilities too, because while you get to call the shots, you also have to handle what comes with the crown. Let's break it down, superhero style. Financial commitment. Owning a home is more than just paying the mortgage. You'll need to budget for down payment,
Typically, this is around 5 to 20% of the home's price. It's a significant upfront cost, but think of it as your ticket to home ownership. Closing costs, from legal fees to home inspection costs, these can add up. Ongoing expenses, monthly mortgage payments, property taxes, and home insurance are just the start. Maintenance and repairs. Unlike renting, where a landlord takes care of repairs, you'll be the one managing upkeep. Regular maintenance, like cleaning gutters and servicing your HVAC system, is essential to keep your home in top shape. Be prepared for those unexpected repairs. They might come with a hefty price tag, but they're part of protecting your investment. Community engagement. Home ownership often means getting more involved in your local community. This could mean participating in neighborhood associations or adhering to local regulations. It's a great way to make a difference and stay connected. Long-term planning. Whether you're buying your first home as a stepping stone to a bigger crib or planning to live there till you're grey and old, it is worth considering the long-term aspect of home ownership. Consider how your home will fit into your future plans, expanding your family, caring for aging parents, or even selling for retirement. Plan your finances and think about how flexible your home is in accommodating future changes. By understanding both the benefits and responsibilities of home ownership, you're well on your way to making informed decisions.
Let's be honest, real estate has a language all of its own. Words like equity and closing costs can sound like they belong in a legal thriller. But don't stress, we're breaking it all down into plain English. By the time we're done, you'll be tossing around home buying terms like a pro at your next brunch. Mortgage. What it is and how it works. A mortgage is the loan you take out to buy your home. It's like a long-term relationship with your lender. You borrow the money now and pay it back, plus interest, over time, usually 15 to 30 years. Until it's paid off, your lender is like a quiet roommate who owns part of your home. Fixed mortgage. This is the set it and forget it version of a mortgage. Your interest rate stays the same throughout the life of the loan, which means your monthly payments won't change. It's perfect if you like predictability and budgeting without surprises. Variable rate mortgage. This one's a bit more adventurous. Your interest rate can go up or down based on market conditions. Some months might be a breeze, others may pinch a bit more. It's flexible, but it's not for the faint of heart. Down payment, your upfront ticket to owning. This is the chunk of money you pay upfront when buying a home. In Canada, the minimum is 5% of the purchase price for homes under $500,000. Think of it as your golden ticket into the homeowners club. Pre-approval, your green light to go house shopping. Before you fall in love with that dream home, get pre-approved. It's like getting a permission slip from your lender that says you're good to go. It tells sellers you're serious and helps you shop within your budget. Interest rate, why it matters for your budget. This is the cost of borrowing money. A lower interest rate means lower monthly payments. Even a small difference in rate can mean big savings over time. It's worth shopping around for the best deal, just like that perfect pair of shoes. Equity, how your home builds wealth over time. Equity is the difference between what your home is worth and what you still owe on your mortgage. As you pay down your loan and your home's value rises, your equity grows. It's like a savings account you live in. Amortization period, the long game in paying off your loan. This is the total time you'll take to pay off your mortgage, typically 15 to 30 years. The longer the period, the smaller your monthly payments, but the more interest you pay in the long run. It's the marathon of mortgages. Closing costs, what you'll need on top of the purchase price. On top of your down payment, you'll need to budget for closing costs, legal fees, title insurance, inspections, etc.
They usually range from 1.5% to 4% of the home's price. Not glamorous, but essential.
Land transfer tax, a one-time payment when you buy. This is a provincial tax you pay when the title of a property changes hands. It's a one-time cost, and how much you pay depends on the price of the home. Think of it as your entry fee to the landowners club. Homeowners insurance, protecting your investment. This covers damage to your home and belongings and provides liability coverage in case someone gets hurt on your property. It's your safety net, and trust us, it's worth every penny. Property taxes, your annual contribution to local services. Every year, you'll pay taxes based on your home's assessed value. These go towards schools, road maintenance, emergency services, the things that make a community tick. Home inspection, keeping it honest. Before you buy, a qualified inspector checks the condition of the home, roof, plumbing, foundation, you name it. It's like getting a second opinion before you say, "I do" to your new house. Appraisal, keeping it accurate. Your lender will often send an appraiser to confirm the home's value before finalizing the loan. It ensures you're not overpaying and the bank isn't lending more than the home is worth. Think of it as a reality check with a calculator. Offer to purchase, your official proposal to the seller. This is the formal document where you say, "Here's what I'm willing to pay and here's what I expect in return." It includes the price, conditions like getting a mortgage or inspection, and the closing date. Basically, it's your house proposal. Title, making it legally yours. The title is the legal proof that you own the property. Your lawyer checks it to make sure it's clean, no liens, disputes or surprises. Once you have the title, the house officially becomes yours. Closing date, the day it all becomes real. This is when the keys are handed over, the money changes hands, and you officially become a homeowner. Pop the champagne. This is the day you've been working toward. Condo fees, shared costs if you're buying a condo. If your dream home is a condo, expect to pay monthly fees for the upkeep of common areas, like the green spaces, gym and pool areas, or even the street lights. Think of it as a group effort to keep everything running smoothly. And there you have it, a comprehensive glossary of terms to help you navigate the world of home buying with confidence. With these definitions in your toolkit, you're well on your way to mastering the lingo and making informed decisions. Remember, there's more to explore. In the next tutorial, we'll dive into the exciting world of financing your dream home. Stay tuned.